Hey, good afternoon, class, and welcome to week 3. Before we get started talking about what this week entails, a little bit of get out of the way items here. One, I've extended the due date for week 2 homework. That would be just the chapter 3 assignments. I cannot extend after this week. If I do, you guys will be so behind on past chapters that it'll be hard to focus on present. So if at all possible, please do complete all the week 2 assignments, which is chapter 3, as well as the current week assignments. To assist with this, I shortened homework by 25% for week 3. So I pulled back the Smart Book questions from 20 to 15, as well as I made all of the assignment questions for chapters 4 and 5. I made them all multiple choice or true false. That should really help with you guys answering questions. Remember, they are homework assignments, so if you answer wrong, you will get clues on what is the right question, and you can do it as many times as possible. With that said, I just want to say thanks for the posts for week 2. Fantastic posting, guys. I love to hear that a lot of you both found the information familiar, but also found it new in that you hadn't really stopped to think about how many companies use accounting or what a balance sheet is. Accounting is the core of any business, and to be honest, it's also the core of kind of your personal finances as well. I'll go into that shortly here. On posts, I just want to give a special call out to Dakota, who pointed out that pretty much everything uses accounting in his post, and that is true. I mean, you name a business from restaurants to Concordia that you're at right now, they all have accounting departments. They all track, and it's the only way that they know that what they have, they really have, and what they owe, they really owe. Ashley, look, when you understand accounting, conversations that go on around you, especially in business and investment, just make a lot more sense, especially when people are talking about risk and why one company is better than the other or why one company can't get debt. It just helps to basically have an understanding of what they're talking about, and I'm excited for you to hopefully unlock more and more ways to be helpful at the firm you're with. Mason, retained earnings, great point there. I mean, retained earnings mean your company is making money. It's cash flow positive, more or less. Retained earnings can either be paid out as dividends, and then they're not there to reinvest, and that's just something that you only have a decision to do once you have retained earnings. So retained earnings are great. All healthy companies should be having those retained earnings to decide whether to reinvest or whether their investors, the people that gave them money in the first place, whether they want to pay those folks out. Christopher, that is the magic equation. I actually think about it normally as assets minus liabilities equal owner's equity. It's the same as liabilities plus owner's equity equal assets. The reason I think about it that way, though, is I keep a balance sheet for myself, and that is normally called a statement of net worth when it's related to an individual. And basically, instead of equity, that section's called your net worth. So sometimes you may hear that, Elon Musk's net worth is $145 billion or something. And what that really means is if you summed up all his assets and then you subtracted all the liabilities, that is the amount of cash or the amount of money that he should be able to get his hands on if he paid everyone he owes off and he sold everything he owns. So it's a fun thing, and Caleb, you kind of were in the same spot on this combo. I would suggest, if you've never done it before, calculate your own statement of net worth, which is basically a personal balance sheet. For everyone in this class, it's a fun exercise to see where you are, and year over year you can track, hey, am I making money and keeping it? Or each year when I work, is my net worth going down? For a lot of us, I know when I got out of college, my net worth was actually negative. I had less cash and less things I could sell to make money than I had college debt and other liabilities. And that's okay. But it was fun. Each year I put together a personal balance sheet for myself. And it's pretty exciting year over year tracking that and seeing the progress I'm making. Lastly, to lead us into the week 3 chapters, Melissa, thank you for sharing that personal story about fraud. Super important. Accounting is good, but accounting is really only as good as the records they keep. And one thing I wanted to call out that I'm not sure the book does a good job is accounting, yes, it can be accurate, but unless you actually look at the support for the entries you make in accounting, people can still commit fraud. So example, I could book that there was a $10,000 expense that the company owed for, say, equipment, but really I could pay that $10,000 to me if I'm in charge of the bank account. The only thing that would allow someone to catch that is if they actually looked at a copy of the check that was cashed, they'd see it was deposited into an account for Dave Dart as opposed to an account for the fake business that I said had the expense. That is what this week is about, week 3. The first chapter, chapter 4, is going to be about cash, and it's going to be about internal controls and fraud. Please read it. It's very important to understand it. It also will help you understand, for all of you that work in businesses, especially at the cash register on the sales side, you'll kind of understand why there's a lot of cumbersome things they do where you're like, man, this is such a process, like counting the cash register when you switch tellers, or just other things. You can kind of start getting an idea of like, oh, I get it now. They're doing all this because they're trying to cut down on theft, or they're trying to increase their internal controls. The next chapter, chapter 5, is on sales and receivables. Again, very important part of the business. One real life example that I think you guys might find interesting is, I know a lot of you probably go to sporting events or concerts, and you may have found that at sporting events and concerts, you no longer can pay with cash. The only way to pay is with credit card and debit card. Not sure if you've ever thought about it, but the primary driver for this is actually accounting based. It's actually a system of internal controls. By getting rid of cash payments, they don't have to worry about someone stealing from them or someone getting paid cash at a game for a beer or a drink, and instead of putting cash in the register, that person just puts it in the pocket. By doing that, they get to cut down on security, they get to cut down on all the controls that go along with cash. And it's kind of got to the point that a lot of nonprofits, including schools, will only do it as well because they don't ever want to have a chance of not being able to account for cash. Nothing kills a charity or nonprofit like being accused of fraud. So by doing things only with credit card, it allows them to always have a record, because the credit card company they can't control. They don't have the ability to actually control what charges occur after they're completed through the credit card processor. So little nugget of information today. Yes, it probably helps those stadiums make a better profit and just have more efficient operations. But the primary change in stadiums and concerts to credit card only is really to cut down on the fraud that was occurring by folks at concerts selling stuff but not actually putting the cash in the register. Thanks. As always, if you guys need anything, feel free to reach out. Hope you guys are getting a ton out of this class and really appreciate you guys sharing. Have a good one.